Hello and welcome, everybody. My name's Pat McCann with Noble Capital Markets. Today, I have the privilege of introducing Vijay Kote, who is the CEO of GoHealth. A lot of exciting things to talk about at GoHealth. So, with time being limited, we'll get right into it, and I'll hand the floor over to Vijay.
Thanks, Pat. It's really a pleasure to be in front of you all today. I'll jump right into it, but I'm the CEO here at GoHealth. I'm Vijay Kote. I have been here for just over 3 years now, almost to the day, and have a lot of really exciting things to talk to you about who we are and where we're going as a company. So looking forward to explaining the story. I'll acquaint you with the forward-looking statements here you can see on the screen. Obviously, you should reflect on this as you think about all the information we'll relay today. And then the other disclaimers. At the top, let me just describe to you. You can read the page, but I really want to focus and give you the description of who we are and what we do. For those of you not familiar with GoHealth, we help Medicare consumers, those who are eligible for Medicare. Over 67 million Americans have access to Medicare and are eligible. And we help them find the most suitable plan for their needs. That might seem simple, but the average Medicare consumer has over 50 health plan options available to them. And if any of you watch TV or have family members who are Medicare consumers as well, especially in the fourth quarter of every given year, you'll know they're bombarded with advertising. They're bombarded by mail, telephone calls, all these different things from legit players and unscrupulous parties trying to take advantage of them. And so they don't know who to trust. What we do is we provide a unbiased marketplace where consumers can come into us via our marketing channels. They call us on average. They come on in. Our licensed agents then help use our proprietary technology and tools to match them with the plan that is most suitable for them. Like I said, there's usually 50 plan options for Medicare consumers. They don't know if their doctors are covered. They don't know if their drugs are covered. They don't know if they're actually eligible to participate in that product. So what we do is we help use our tools to get their doctors and drugs in an efficient way, find out what needs are most important to them, and then compare the options that are available that our proprietary tools would say is the best option for them or most suitable against the one they have, explain to them what the differences are, and then assuming the better option is one that they're not already on, then we will enroll them in it. But we'll also, excuse me, confirm for them whether the plan they're on is the best. And if it is, our agent will tell them to do nothing. So we help provide peace of mind to the consumers that shop with us. And you can see this here. We served over 11 million consumers have come through shopping with us for over 30 million shopping experiences. Last year alone, we enrolled over 1 million consumers into Medicare Advantage plans. That is by far the #1 source of enrollment through brokers of any other channel within the industry. We are the #1 source of enrollment for nearly every major Medicare plan in the country as well. As you think about who we've been and how we got here, we've been a very focused company from the beginning on serving consumers. We learn on the individual basis that it's really hard to find a good insurance company for yourself and to know how to get the best coverage available for you. We've been using technology to support that for over 20 years. We really focused on using technology to build an operating, to gain operating leverage, to do more with less, and to continue to drive that forward with scale, and then find ways to be more efficient in this very capital intense business. And we'll talk to you about how we've done that. As I indicated, the overall marketplace is growing. You can see that on average about 6 to 7%. The overall Medicare Advantage market has been growing. Medicare beneficiaries are growing in that 5 to 7% as well. So 68 million people growing at around 5 to 7%. And then within that, half of the population has chosen a Medicare Advantage plan. And you can see that's growing in a consistent ratio versus the overall population, again, at around 6.5% growth. On the right-hand side here, what you see is that we are the #1 Medicare enroller for health plans. You can see all these brands that you recognize and how we rank for all of them. If you think about what's different for us, a lot of you may ask, we see these advertisements from Humana, we see them from United. What is it that makes you even necessary in the marketplace? Well, I can show you here first, how do you compare the multiple models in which people enroll in health plans? And in general, it's about a third, a third, a third is what the market does today. Health Plan Direct. If you know you want to be on a United plan, why don't you just call United? What do you get when you do that? Well, when you call United, are you going to get a lot of consumer choice? Are they going to tell you about the other plans by other health plans? Of course not. Consumer comes in, they're not even authorized to talk about the other plans. All they can talk about is the products that they have available. So that's great. They know them well, but they don't know how to compare against all the other products available. They don't need a sophisticated technology or tool to be able to differentiate between the products. And so there's not a lot of technology there. And the third one is critically important. Will they tell you that a product offered by another health plan, not the health plan you carried, is actually better for you? Very low probability. Most of those agents are only compensated for enrolling you into a new product by their health plan. So that's option one. That's Health Plan Direct, and that's about a third of the marketplace. Next one is a traditional broker model. And when you think about a traditional broker model, that's in the field. Agents who live in the communities that serve the consumer. They know them. What does that generally mean? Well, most people don't understand that when they go to, Bobby Jones, who is their traditional agent in town, they go to Bobby and they say, "Hey, I'd like to find a Medicare Advantage plan." They assume that Bobby's got the ability to go and just, compare against all the different plans they might have available to them. Where in reality, it's inefficient for Bobby to do that because he's got to go get a contract, get a certification, be appointed by all those plans. It costs him money, and generally they only offer a handful of options, not all of them in any given market, and usually the ones that they feel are most efficient for them and or may compensate them the best. So, are you getting a true unbiased experience? You're getting a little bit better consumer choice. There's still very little technology used, and ultimately that agent again does not get compensated nor has any incentive to do anything but enroll you in a new product, not to allow you to stay in a product that somebody else had enrolled you in. Now let's go over to the third bucket. In general, e-brokers, I would say, are about a third of the market, but GoHealth is unique and different within that pool. GoHealth provides high choice. You can see all the brands here that we've got available on the screen. This is just a sampling of the products that we make available. Two, so when you come in, we have an unbiased assessment, like I told you. Find out your docs, your drugs, your preferences. We filter that through our logic, and we will present to you the best plan options utilizing proprietary technology that's built to do just that. You need to not just have tools that understand the givens, they also need to reflect on what consumers have done. So our Plan Fit tool, which is our proprietary logic, utilizes the 30 million shopping experience, serving 11 million consumers, understanding what plan they enrolled in and how they stayed in those products to identify the one that we think is the best fit for you. That's what we use technology for, and that's why that's high. And then finally, at the bottom, the unbiased Plan Fit checkup. You come through, the product you're on, we didn't put you on, but we assess it, and our Plan Fit tool says that product's the best one for you. We don't enroll you in the next one, which would actually pay us. We tell you that you don't need to do anything. And we're the only company in the country that pays our agents for doing that. Nobody else does. Nobody's followed suit. And we've done this for now over 2 years. So you truly get peace of mind, not just a new product when you talk to us. This is that flow that I just described. I won't bore you with all the details, but again, it is understanding your needs, using the technology to understand that, compare all the options available, and then make sure we get you access to the benefits. It's not just about matching with the plan. It's about supporting you continuously to engage in it. The number one reason why consumers disenroll from a product or from a plan is because they were pitched something that didn't work the way they expected, or they didn't access it soon enough to know how it worked. They're dissatisfied with it. They file complaints about it because it doesn't work the way they heard it. Doesn't mean that it doesn't work the way it's supposed to. It doesn't meet their expectations. Or they had trouble really navigating the system. That's where we come in. We reach out. We work with them via text and outbound phone calls to them to follow up to make sure, are you getting what you need? And if not, what do you need to help make that happen? Why do we do all those things? Why do we're not tracking on a basis of just enrollments. We're trying to build long-term relationships. I'm still a capitalist at heart. We want to do the right thing. And sometimes that's going to mean that in some years, you're not going to need any new enrollment. And that's what this shows here about Jane. Jane's got a journey where her needs change every year. A lot of consumers think that they enrolled in a plan. If it ain't broke, don't need to fix it. But in reality, your needs, your healthcare status changes every year. You may have different doctors, may have different drugs. You may have moved to a different place. your life has changed. You need to reassess that. And we recommend that everybody shops every year just to compare against their needs, as well as the options that change every year too from health plans. And you can see here in 1 year, we do an enrollment in 2020. The next 2 years, your product was still good. So we just do a plan fit checkup. No change at all. She's diagnosed with diabetes. A change is necessary. Then no changes. Then she moves. She needs to make a change again. And you can see the pattern here. Multiple times you're not going to do anything, but there's going to be more times when you don't need to do anything. Whereas if you went to another broker, they're likely every interaction will try to switch you to something new. And that doesn't do anything for the consumer. It just generates churn and uncertainty, and it really impedes trust. And that's what we're trying to build. We're playing the long game, and that's why we do the right thing in each one of these instances. As you reflect on us, these are the things that really differentiate us in the marketplace. We talk about the proprietary tech, and we have the greatest talent. There are a lot of players out there who say, hey, why don't you just do this all online? And maybe I should just clarify that. We don't do one enrollment without having a human-to-human conversation. And why is that? You say, well, you could be very efficient with it. No, we don't. We think there's an efficiency trade-off with quality. First and foremost, know your consumer. Consumer wants to get peace of mind from another human who could answer their 3 very specific questions. I've worked in Medicare for nearly all my career. 20 plus years I've been serving Medicare consumers in Medicare Plus Choice and Medicare Advantage. I understand their needs. I understand that when you sit across the table with them and talk to them about a new benefit plan, it all sounds good, but then they have their own personal 3 questions that no one's ever going to have pre-programmed about on this day of the week when I travel to see my grandkids, how does this work? Or I had a real bad issue once where I broke my leg and I was international. What did I do about that? Those are questions you want to hear from a human. And that's why there's not a lot of enrollment through online marketplaces for consumers to enroll in Medicare. What they want is to know that you have tools to individualize the assessment, which is what our technology does. And then our agents are the ones who actually follow through to understand more about you, to actually listen and build trust. And so we have been working hard to bring down the average handle time of calls to now 54 minutes. It used to be up to 120 minutes. In that 54 minutes, easily 15 to 20 of that is just building a relationship. It's learning about your needs, learning about your hobbies, learning about your grandkids, the weather, building trust. Because in those conversations, we learn something that could be helpful with matching with the right plan. So our agents go through that consistent workflow. The technology drives it. We make sure we have the experience to deal with the more complicated questions of special needs populations like dual eligibles or those with chronic conditions. And then we make sure that we incentivize those agents with our technology to do the right thing. If you think about our efficiency over time, you can see here, this is us versus our other 2 major public peers in the 2024 full year. You can see versus the one of our peers, we're over 30% better. The other peer, 17% better. And year over year for GoHealth in the 4th quarter alone, we were 20+% better than ourselves. We're continuing to drive down that cost of acquisition. That comes through efficiency driven by technology, by eliminating unnecessary variation in the process. If you look at our financials, again, you can see this on a year-over-year basis, looking at Q1 24 versus Q1 25. We were up 19% on revenue, and adjusted EBITDA was up 56%, driven by continued efficiency and the market dynamics that existed at the time. As you go back and think about this on your own, this is kind of the placemat you should take back to your investment committees or to your co-investors or whomever else, just to remind yourself of what you learned. GoHealth serves a large and growing market. We are the largest in that market. We have an unbiased shopping experience, and we put our money where our mouth is. We use technology to drive that home, and we use compensation models to reinforce that behavior. Our Encompass workflow, that offering is unique and differentiating in the marketplace, and that's why we brand it as Encompass, separate and distinct from anything else. Our Plan Fit tool is driven off. It's a true AI model that takes real data that nobody else has the same size of us, 30 million shopping experiences that we can use to feed and try to triangulate and match consumers with profiles to say these are going to be the products that work best for you. And sometimes that's your own. Our experience management team, myself and the rest of my team, have extensive years, decades of experience serving this population. We do a lot of our own internal marketing. and supply demand matching that keeps us efficient to make sure we can control the mismanagement of messages out in the field. And we can be honest and transparent with consumers to why they're coming to us and not try to do a bait and switch like is so prevalent with bad actors within the industry. Our health plans always want to grow someplace, even in these disruptive times. They have markets where they don't want to grow or they're having challenges profitability, but every health plan always has a geography where they want to grow. And our ability to have scale and specificity with our marketing and service capabilities enables us to support wherever their goals may be. And then finally, those best-in-class operations. We are an operating business. We operate with KPIs and drive to the best performance we can. So with that, I'll stop and see if we have any questions. Or Pat, if you want to augment with anything, we'd love to do that too.
Thanks, VJ. Yes, we do have some questions. First off, the company over the last couple of years, if we look at 2024, adjusted EBITDA margins scaled to 15%, up annually from 10% the prior year. And I think a lot of that was driven by increased efficiency, some from AI, and just increased agent productivity. I'm wondering, how scalable are the recent AI-driven efficiencies across agent workflow? Have these improvements plateaued, or is there still meaningful runway for additional cost reductions and additional margin expansion?
No, there is meaningful runway. I will tell you that the way I describe this when I think about the automation, the efficiency remaining in the system, and we did the low hanging fruit when I first got here in 22. What was the low hanging fruit? It's the quintessential story. Oh well, every agent's got 8 screens open. We took it down to 1, right? Oh, that's the easy stuff. We did that already, right? We started the average phone call, it takes 13 minutes to get somebody's doctors and drugs put in the system. What we did is we put an API in place, and with the consumer's consent, we can pull that in. So we've done the easy stuff. Now we're managing in more co-pilot technologies to enhance the interaction for the agent while they're speaking live to a consumer. And there's still a lot of runway left in that true AI automation co-piloting endeavor that we think leaves still though we're the leader in the race. I think we've got a lot more capacity to go faster and to do it more efficiently and drive down costs there.
Excellent. And then another question had to do with the final expense initiative that the company launched. I think the question really is, what is the revenue level? How should investors view a final expense policy sale relative to your typical Medicare Advantage policy sale? Is it a similar first year commission level? Are they relatively equivalent to each other?
Yeah, so a great call out. It's not part of the deck yet, but I'll highlight it, which is we've been diversifying into really thinking about ways to optimize performance all year long, right? We've got an agent capacity, but the demand function against that capacity varies through the year. Those of you who have ever heard my presentation know that we describe this as a Christmas tree business, right? Where you're doing a lot of work in the first 3 quarters, but really preparing for this Super Bowl season that happens in the 54 days of the 4th quarter when everybody has a shopping season. And so what we've introduced this year is going into a life insurance product, a guaranteed acceptance or final expense product. It's a life insurance product that our agents are able to offer, and mostly in the special election period, meaning the Q2 and Q3 timeframe. So we've read the marketplace and saw that there's a lot of health plans who are pulling back right now. It's not very clear as to what they're going to do with the products, and to have real integrity in the products we offer, we're pulling back on a lot of what we're doing in a Medicare Advantage till we see the stability in the product, and we're shifting our resources into selling that guaranteed acceptance and final expense, which we've tested and proven to be successful in serving our consumers. When you think about the unit economics of it, Pat, what you're going to see is that the revenue is going to be fairly consistent with a traditional Medicare enrollment. The margin's actually going to be a little bit better because you have a lower handle time on those calls. So, our KPI we always talk about is handle time. So you can do more, you can take more phone calls with the same number of agents on this endeavor. And I think the more important thought on this is, you know, the differences between agency and non-agency, but one of the key differences between agency and non-agency is the cash profile of it. And this business of guaranteed acceptance is more aligned with non-agency, where the revenues are actually pre-funded to us, right? So that we have the capital invest in marketing and support the resources. So it alleviates the need for working capital. Not only does it give you the working capital, but you get the margin at time 0 or even time -1 on that. So it is fairly equivalent on revenue. It is a little bit of an expansion on margin, and then it is more like non-agency of pre-funding, so very positive on cash flow from a workflow from a timing standpoint.
Great, that's helpful color. Another
Sorry, Pat, I can't hear
issue
you.
with the debt.
Oh, sorry.
I'm sorry, can you hear me, VJ?
I can hear you again now. Go ahead.
Okay. This up, the debt covenant issue that the company to you, but the question really is, have you?
Sorry, Pat, you keep coming in and out. I think I know the question, but you keep coming in and out.
Yeah, if you can hear me again, I'm sorry about that. I'll let you, basically, if you could address.
Okay, I'm assuming it's about the going concern. And so let me hit that. So yes, obviously I've shifted the business model, right? I've made this stuff. You know, my belief is this, is that, and those of you who've already met with you, you've heard this, is that people show you and tell you who they are and what they want. It's up to you to hear it and see it. Right? We have to hear it and see it. And we've seen it and we've heard it. The health plans at this point are not interested in growth at this point in the year with the product that they have for 2025 and with the reimbursement model and the pressures that they're feeling in profitability. You've seen that jump out with what United's done this year and the challenges that they've had. We made this call before United even made their announcement. We saw it, we heard it, and we saw it and we anticipated it, so we reacted for it. But what does that mean? I just refied about $500 million worth of debt the latter half of last year in the fall. And when I did that, I had a pro forma that assumed a lot of different performance, but did not anticipate that the market was going to do what it's doing right now. And so we read and react, and we shifted significantly into final expense, as I announced on the Q2 call, or Q1 call. And in doing that, that changes the structure upon which my covenants were set. And naturally, with that type of a change, you're going to have to reset those covenants. And if you look at our last lender arrangement before we refied, we amended that over 10 times for similar situations. This is not an uncommon thing as you read and react to market dynamics. And that's what we're doing now. So actually, right after our earnings call, we had been informed that there was going to be a note about a going concern given the need to change those covenants relative to what we had in the previous model. And we are expecting that we will do just that. As we said in our disclosures, that we're going to work with our lenders to renegotiate those covenants and move forward. So that's what that's related to. But again, I know it's I think there's a little bit more of a drama around it than it being just somewhat that something that happens not inconsistently within industry, and that there are remedies to address. Pat,
Finally, if you could
go ahead. I'm getting every other word.
DOJ, VJ, if you can hear that.
Yeah, perfect. On the DOJ, those of you who are close to this industry and or even Medicare Advantage in general, you probably heard about a DOJ complaint that was made public on May 1st of this year. And that DOJ complaint was specific to activities that were related to 2021 and prior. These complaints are talking about a number of different allegations by the federal government related to a whistleblower lawsuit. And they've named ourselves, the other two large publicly traded e-brokers, and then 3 major health plans in that. All I can say on that is that that investigation actually started back in 2022. Been fully aware of it. It's been part of our disclosures and risk factors for some time. Actually, we updated in Q1 thinking this might be coming. And so we were the only ones in the industry who actually did that. And then obviously it did get made public in May. On May 1st. We, as we've said publicly, we're going to vigorously fight this. We believe we've done nothing wrong here. And based on the rules of how that's established, there's not much more I can say other than we are confident in our position. We're going to fight it. and it hasn't changed the way we need to operate. We've always operated under the rules of the road, and we expect people to hold us accountable to those. And if rules were to change, we'd operate under those. But we've always operated on the rules to the letter of the law.
Great, thank you. I think we're about out of time. I don't know if I'm even being check out my research and
Well, hopefully you can hear me. Hopefully you heard Pat. I didn't. I don't know that, but I'm sure he was saying thank you. Read his research. It's great. He does a really good job with it. Very thorough analysis of us and other parties. Always love Pat being a part of these things. And if you do have questions, you can reach out to Pat. He knows our company very well. Or if you'd love to interact with us, you can call me or John Shave, our VP of IR. So thank you all.